The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, into the breach do we go, dear friends. And what do we have going on? Well, it's certainly an interesting market. Beat me to it. Okay. Very interesting market out here. We tried to get lower. I think we were low as, what, minus 15 on the S&P? What was it? Let's take a look here. Okay, so we got down to 29. Oh, we got 730. Oh, that's that's something else. That's something else. Where has that gone to, the little devil? I'll go ahead and click on it. Okay, so what was the range today? Okay, we got down to 2736. So that's 13, well, 13 points lower. Now just off a couple of points, 2 points lower. The Dow's up 2. NASDAQ's off 13 after it was off 60, 65 points. Again, like I said yesterday, I don't think that there's anything new to really push into this, but the idea is that there, for the most part, there is, everything moved around on me. Anyway, there's not a lot to do. We're going into earnings. We had Lennar out before the bell. It kind of did nothing till about noon. It's up $1.50 now. We'll take a look at it soon. KBH after the bell, it's up 30 cents. And it's going to be a case-by-case basis, but I think a lot of people are not going to be sticking their necks out, but at the same time, they're not going to be selling. And that's going to kind of create a flat market. Now, one of the best things about flat markets is there's always a bull market somewhere. That bull market, when equity markets tend to go flat, tends to be commodities. Saw gold get pushed up a lot higher earlier in the day. It got up to basically the recent highs of a few days ago, printing off 13.19 as we speak. So it's up a little. It's up $5, but it's up another $5 or so more than that earlier in the day. And of course, that was all a roller coaster ride. Started with the dollar heading lower, and we saw the dollar head lower, and bonds give it up earlier based on Chinese comments that they're not going to be buying our treasuries. I don't know if that's a news or not. We've been talking about 2 years about how they've been selling our treasuries. So does that make, they've been a net seller for a long time. I don't know if it's so much news as maybe just the realization that they won't be the buyer. And of course, they continue to help fund North Korea, which is, they can always have them kind of launch a nuke at us if they want, and they'll deny any responsibility. That's kind of at least the worldview. So they kind of think that they have us checkmated. I don't think that they understand Americans very well. But that is it. We're kind of seeing some little skirmishes out here. Sino-American relations. I don't get to say Sino. That was like a big word when I was growing up in the 70s when Nixon was going to China. Sino-American relations. It was like the top lead of every news report that year. But like I said, we're going to bounce around a little bit. I don't see that there's a lot going on here. I don't see a lot of new news. I think a lot of people maybe thought that the Treasury issue was a new thing. I don't think it ever was. What do we have for the TLT? Did it recover much at all today? It's still off 44 cents, got down to 122. I still think that that's in a trading range, and that trading range goes from about mid 128s down to 116. I think, though, that the hard news that they're willing to actually say what has not been able to be said before. That is that they're not going to be a net buyer of our treasuries, that it's probably not a good bet, and that probably means the 30-year run in bonds is close to over. I know everybody will fight it to the bitter end, but my guess is that we're going to meander, wander, stumble. I'll look for more metaphors and additional words to describe my feelings when I use my words. Well, I think that's at least a retest, or good for a retest of 116. I don't know if it takes a month or two to get there, but I think we're there now. Of course, the dollar kind of imploded a little earlier. It's getting a lot back. What is it, off about 12 cents now? But again, there's been a lot of movement from the Fed, from the Treasury, to make this about 92 on the dollar index stick. They think that that's about where they want it to be. So I don't know if the dollar's going to move. So if you're interested in commodities, I think that's a slow but good slog up for an equity market that has, for the most part, some implied puts underneath the entire market. So if you're bearish, I'd be selling put call spreads and collecting the cash, because I don't think there's that much downside. Maybe we get a surprise and the market decides to croak, but I think we're going to have some real winners and real losers in earnings, and it's kind of hard to tell before what these companies are doing. I'm not a forensic accountant, but I think if you are, you'd probably make some fairly good money by figuring out what these guys are going to say pre-earnings. If they have continued problems with the new tax plan, that would be an interesting thing to know going into earnings, because these guys are going to be asked a lot by it in the earnings calls by analysts. And that is how you set up, what happens, how big a charge you need to take. Do you need to take a charge at all? Is it going to be a big windfall? Well, it's going to be all over the place. Net, I think it's going to be slightly positive and hugely positive for a handful of companies. That is the FANG stocks. They're going to bring back somewhere in, at least even Apple said that they're going to bring back something like $120 billion in the next 2 years. All of that is going to be used to buy additional shares of their own stock back. It's going to be a real problem until these guys run out of money. They also went out and got lots of cash with bonds, not knowing whether or not the repatriation thing would be there. So they've got a lot of low-priced money. They're all set up where they can go out and buy new companies. Interest rates aren't that much higher anymore. So you still have to worry about buyouts. You still have to worry about some other issues. And it's just very tough being short. But, I know how you get that kind in a craw. You become a perma bear. But the old saying is, there's no bull side to the market, nor bear side, just the right side.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are back, and of course, time for a little bit of history.
Then it's all just a little bit of history repeating.
It is history repeating, and on this day in 1901, a drilling derrick at Spindletop Hill near Beaumont, Texas, produces an enormous gusher of crude oil. Texas tea, don't you know? Coating the landscape for hundreds of feet and signaling the advent of the American oil industry. The geyser was discovered at a depth of over 1,000 feet, flowed at an initial rate of approximately 100,000 barrels a day, and took 9 days to cap. Following the discovery of petroleum, which at that time had been used primarily as lubricant and in kerosene lamps, would become the main fuel source for new inventions such as cars, airplanes. Coal-powered forms of transportation, including ships and trains, would also convert to the brown, blackish liquid fuel because it was so much more efficient. You know, a lot of people don't really think about it, but, you know, a lot of things change things. And coal and steam powered is about, it's about 10 to 12% efficient, very inefficient. But of course, when they went into burning that in diesel engines, your efficiency got up into the 30s. I think it was 35 or 37% efficient for diesel engines. You also didn't have to have a lot of people shoveling coal, which wasn't an easy thing to move around. And it's kind of easy to pump in and pump out. Didn't have to have a lot of people to use it. And on this day in 1901, Texas becomes the oil state. And I don't think that there's a lot. We were talking about James Bond. They were shaken, but not stirred today, as China added to bond investors' jitters and said, basically, we've recommended slowing or halting the purchase of U.S. Treasuries to people familiar with the matter. As I said before, nothing new in this, but I think There's sometimes when the unsaid becomes said, and everybody kind of wakes up to the fact that, well, maybe after being wrong a number of times, the big bond guys who were calling for a bear market confirmation may be fairly close to being the truth this time. But you never know. Anyway, we're going to go on to some other things. What am I going to say? I wanted to say up in the air junior Birdman. I don't know where that came from. Scout camp 1,000 years ago. But we will look at the rest. Some questions out here. Let's take a quick look at the GLD. Did gold form an ABC up crossing the 1227 line with a better volume than swing than 1418? I haven't looked at it, and of course a great deal of this is based on what happens in the futures market, so I'm not going to get too excited about it. But I will tell you that I was looking at quite a few ABCs in the gold miners, and I think they look fairly decent out here. I'm not playing the metal itself. I'm thinking that the metal goes up, that's 50%. But if the metal goes up, that may be 300, 400, or 500% on the miners over time. So for me right now, the thought is that miners have kind of locked in gold around this $1,300 level, maybe $1,250. Any kind of additional upside out here could vastly move them compared to the price of gold. So I'm not going to spend a lot of time on gold itself, other than the fact that I think it kind of acts the way that it should. And I'm kind of thinking this thing is in the last wave, which is characteristic of slow, even, plodding moves, sometimes going sideways for a little ways, but never really pulling back significantly. And it can do that for years at a time. And, you know, we could certainly see that in gold, but I'm thinking that, you know, the run back up to retest the 1800s. I didn't know if it was 10 years or 20 years away or a couple of years, but we had a couple of good years of consolidation. And now we're kind of back here taking a look at this thing, and it's not looking that bad. Economic conditions also help for a little bit of inflation coming our way, but the charts certainly look fairly good. I think the government debt puts a little underneath this. But why does this thing just not rocket up to 1800? Why is it going to be slow and plodding and test your patience? Well, at the same time, we've got a lot of cash coming in, and they're going to have to buy back those dollars. So even if we get a little bit of a small amount of inflation, I think it's going to be offset by other issues. So on the net side, I think it goes higher, but that's markets that, you know, double and triple in a handful of days are also over in a handful of days. Could see this thing just kind of limber and stumble and wander all the way back up to the $1,800, $1,900 range if this is truly the last wave in gold. So yeah, I think you're fine. I added to or bought a new gold position today, and it's based on the idea that this is going to be one of these ones that pays back huge or a very small loss. But it is certainly not a Hail Mary, but certainly could be thought of it that way. But I really like the chances of it. And I like the chances of the other ones that I've held through the pullback. And like I said, I think if you try to trade in and out, and this is the last wave in gold, it's going to be extremely problematic. So what else do we have going on here? We had another email I need to get to. I went short Cisco yesterday at 1380s. It looked to be topping out. Of course, today got an analyst upgrade. What do you think? Again, any company that has massive amounts of cash overseas is not a short candidate. You need companies that would be quickly hurt in a market pullback and that don't have seas of cash overseas that are going to come back over the next couple of years. These guys are going to do nothing but rebuy their stock, and eventually that will wear out. but my guess is you will wear out before they wear out. Even Cisco's got a lot of cash overseas. So, all they need is 50 or $100 billion. They can buy and support their stock for a couple of years. I mean, the saying that William Buffett says that you really can't tell who's swimming without a bathing suit until the tide goes out is true. You need the tide to really go out. But these guys are going to be the ones that are the best off, not the worst off. So when everybody's bludgeoning Intel and AMD and Apple, I mean, God, Apple has a million sins, but one of them isn't that people buy them for their kids and there's problems because the kids use them too much. If the parents had a brain in their head, they wouldn't have given them an iPhone to begin with, or they would take it away. But since they do neither, you can't fix stupid. So if you think your kid's got a problem, take his iPhone away. But don't go on there and whine at Apple for that. They've got twice as many things to do and twice as many sins that they should be flogged on, but not this week. It's all these kind of weird things going on. We'll be back in a minute.
If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And first, when we were talking about Cisco, it's made no signals that would say go short. There's nothing in there that shows that it broke. So yes, I would go ahead and cover that short. Now, there are other stocks out here that if you're really thinking are going to pull back, they've got some good signals. We're going to look at a couple of these charts out here. ANSYS, ANSS. This one tested its November 2nd high of 1.5 million shares at 155.14 with 400,000 shares yesterday, and it's pulled back today. Now, support probably comes in at 140, but man, what is that, 15 points? Yeah, that could be a possible trade. Other stocks out here that have been bludgeoned and are back up to previous highs. AutoZone. Now, some of these may have earnings coming up, so you need to check them. I haven't gone through, and I am not pulling the trigger on these things. But if you wanted to see something, there are some out that have tested previous highs on lighter volume. December 5th, AutoZone. 1.2 million share, 1.2 million shares at 763. We go to 782. We're back kind of into that. This thing closes back under that 763. You got a fairly decent sell signal. Now, as we went above that high, 481,000, 430,000 shares, there just was never that kind of 1.2 million shares that we saw in the spike on December 5th. Alibaba, maybe there's something going on in there. You had the 191 high of November 22nd that had 26 million shares, tested with 19.4 million shares yesterday. This one has a little less energy on the leg up, so I'm kind of looking at that. Other ones out here that I wanted to look at, UAL. Now, is this thing going to bust this October 10th high, 69.62 with 10 million shares? Don't think so. Today, 6.5 million shares, but could it get to 8 or 9? Probably good, so nothing in that. We've got Weight Watchers blowing through highs on, 60% of the volume yesterday. Doji out here today. Like I said, I just don't understand pulling the trigger on Cisco. I don't see the reasons for it, whether fundamentally or technically, that would give me that. Maybe you'd want to call in at 877-927-6648 and tell me what I'm missing. I just think that there are a lot of stocks that if you're going to short, you short the weak, and generally you short those stocks that have a fundamental reason that have a problem. Now, a lot of those are already shorted. Tesla, of course, is the perennial stock that's always been shorted every time it goes up and down. Now, this thing's just kind of going sideways out here. But here's a company that has never made one promise, actually delivered on one promise since it started. Can't actually manufacture the amount of cars it wants. The Wall Street is giving it every single break. It's also going up against 5 or 6 other car companies. It's not that far ahead. Actually, BMW has within 5% or 6% of the same amount of electric vehicles on the road. So they're not even the biggest electric car manufacturer. BMW has done a land office business in Europe with their electric cars in the last few years. And guess what? When they turn on the spigot, a ton of cars come out. They've already figured out that whole thing. So to me, there are opportunities to short stocks, but you better come up with a good fundamental reason, and you better probably come up with a fairly decent technical reason. I can think of a handful of stocks that are weak, but that's not one of them. But there are some out here that have given some kind of light volume tests. Xilinx is not one of them. Of course, Altera got bought out by Intel a little over a year ago, and that's starting to bear some fruit. But even Xilinx had more volume yesterday and more energy on the way up. So some of these semis are not as weak and dead over, but I do think that going into earnings, we're going to see a lot of sideways action as we go through the next 10 to 15 days. We've got the banks on Friday. We were going to have the housing today, but that really didn't do much. I mean, they didn't blow it away. I think a lot of people got short this morning. Are getting squeezed out this afternoon on Lennar. But you've got just not that much out here to really stand up and say, you know, I want to do it. And there are just not that many stocks testing previous highs. And for the most part, they're doing it. I don't know much about this company, Noah Holdings, but the last high at 48.30 was what was it? 810 810,000 shares to 129,000 some odd today. So we've got to, you got to take a look at some of these things. What do we got going on here? I think I got some problems. We'll see. We still have that on? And we're back. I don't know if I'm on or not. Maybe someone can tell me. Trying to get all this stuff taken care of. Maybe I am, maybe I'm not. I am on. Okay, well, we're back. Well, apparently, for all this new bug stuff that's coming from Intel, they pushed out a new version of Skype, and I'm trying to lick it, but it's kind of hard to find where literally any of the settings are on this thing. And I'm kind of, if there's a downside to all of this, it is me being forced to learn a program here and find out where all the settings are on this. But hopefully everything sounds good and is looking good. When we were talking, I was out on a rant of, does necessarily the market not going higher mean that there's money to be made going short? And the short answer is not a lot. So you've got to figure out what you're looking at. And like I said, I was looking at some gold stocks earlier. So why don't we go out here and look at least a few of those, if I can find them. There were a handful out there that I thought were fairly interesting. ABX, question of whether these things have done an ABC. I think the answer is that you can make a fairly decent case. You got a 41% retrace in Barrick Gold. No really juice coming in. It went through the bottom of this big candle up that was on the second. And that candle up had about 14.7 million shares. Yesterday, you had about 6.8 million shares. You're back to that support level that went into the new year. So I think you're probably, are you going to get this thing go like a rocket back up? I don't think so. It may meander around here. It may consolidate for a little while, but I don't see a whole lot down here that makes me think that anything's wrong. I think a lot of people used to the fireworks and action of gold in the past are going to be rather sedate. And a year from now, they're probably going to be wishing they'd gone long and just sat on their hands. But I'm not expecting, like I said, a lot of fireworks. I am gold, another one out here that looks kind of interesting to me. This one did what? This one did a B, and if that one's C, that one did a 392 retrace, so almost 40% of its move back up. Energy had a lot of it, but it was, for all the energy you got off that top, you didn't get much in the way of price destruction. And that's kind of the divergence that you're seeing in a lot of things out here. You had some good energy, you just didn't have what I think a lot of people are looking for. What is this? Seabridge, kind of the same thing. This one, though, a little bit bigger. So maybe there are some weaker stocks out here. Seabridge Gold, symbol SA, did a 62, 63% pullback. Now, maybe you kind of like that. Energy wasn't all that exciting on the way back down for this thing. And, of course, it wasn't that big a run, 980 to 1168, but kind of interesting just the same. Wanted to look at some other stocks, so we're going to get to those. As we said before, a lot of the stocks yesterday were making 52-week highs. But again, normally, if you're really thinking that these things are topping out, what you want is a little bit of pullback and a retest of this high. And, maybe does the market go up, just roll over, and then that's it? Not necessarily, and generally, no. You almost always get another opportunity to get out. And a doji or two dojis in a row may be interesting. And would I be going long Caterpillar? No. If I was long, I'd probably be out of it. But I don't see the signal out here that says short it. Could these things just go sideways for 6 months and consolidate? I think that there's certainly that is available. So he says it's blank because for some reason this thing didn't do anything. So we'll try back here again. Hopefully we got something on now. There we go. Well, into each life, some technical difficulties shall occur. What else do we have? I'll look at a couple other ones out here in the news. Did I get that even up? No, I didn't. Got a few more things. Okay. Okay. Now, we had some big movers earlier in the day, but again, that kind of ridiculous stuff. That seems to be kind of par for the course right now, and that is this Cogent. What came out with some news this morning, spiked to 695, given almost all of that back, but still up 13%, which is not bad. But a huge move early off today. And again, this is the kind of market that you get in sideways markets. You get a lot of people on one side of the boat. They all push to the other side. Doesn't last very long, and it comes back the same way. Vox is another one. Now, this one had earnings, and I think it came out a little bit better, but it's up 18%. This is Audio Vox. A nice little pop higher. You got some decent volume out of this thing. You're probably going to get up to 8.25, which is going to fill about half of that gap up there. So, if you're long these things, you're probably going to run into resistance at about 750, but that doesn't look too bad. And of course, some of the other high flyers, or used to be high flyers, are running today. And this does tend to be kind of a sideways market action thing, i.e., that you get a lot of these kind of little or no-name stocks, and they have big, huge moves because everybody's piling on one side or the other because nothing much is going on in the rest of the universe. Of course, Helios and Matheson, this is the one that ran up to 38.86 on October 11th because everybody thought that they had a $10 pass to movies. Well, that would have put all the movie makers out of business, so we know that that couldn't stand. But it is kind of back down here to levels where maybe it's reasonable at $5-6. This thing, what was that? 1/8 the price that it was up there. But at the same time, you're going to get bounces out of this, and they did have that today. So that's kind of interesting. Want to look at a few other things. Have a question to take a look at the SMHs. Am I seeing anything big happening in that? And the answer is, well, you can kind of make some arguments that this thing has broken today, but you certainly don't have the volume that I would like to see in the SMHs. So you're below the 3-day displaced moving average. I imagine you're the same thing on the 9-day. Actually, just on the top of it. So again, like I said, you're down, I'm really looking for volume in the neighborhood of 21 million shares in the SMHs on the way back down. Could you get back to $95.92? Man, maybe you could. My guess is, though, that it's going to start getting caught right around this level and find some kind of base and consolidate in the 101 to 102 area until we start seeing some earnings too. So I think everybody's used to fireworks every single day, and I think we may be thinking more about the doldrums to a little bit down, but that's going to mean that we're going to have more opportunities in commodities. We're also going to have more opportunities in single stocks that have a very good signal.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. If you haven't tried David White's weekly investment newsletter, The Technology Insider, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Technology Insider. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And what do we have here? We'll look for a few things. Just check the email out here. As we said, we were looking at the SMHs and got some questions. If I'm seeing anything else in Microsoft, Miss FT, if I can actually type here. This. Come on, there we go. You're down a little bit today. Is it a big deal? No. Any kind of juice? Certainly not so far. Yesterday, you had almost 20 million shares. You're, at 12 million shares now? So certainly not volume off the top, any of those kind of things. Let's take a quick look at Intel. This and Apple are getting bludgeoned, and the only thing I can think of is that a lot of people wanted to force some people out. Maybe they were short, or maybe they wanted to buy more and they wanted to short people out. But certainly, you got what today? You got 32 million shares. That is right on the gap that had 90 million shares. You did have some decent energy on the way up and the way down. But 42 and a half, which we got to 42.60. Next day or two, could it be a buy? It could. I just think that there are better stocks out there to go long. And basically, you're probably centering around commodities because I think the rest of the market is going to take probably 7 or 10 trading days to figure out what's going on in these new earnings and how taxes impact earnings for the next year. Not everybody's a technical analyst, and especially a lot of guys on Wall Street are fundamentalists. They're going to look at that for the long term because they can't get in and out of a stock on a day. They want to make sure that the thing's still doing well a year, 2 years down the line. But what are they going to do? They're going to say, okay, has anything really changed in Intel? I can make an argument that if truly what everybody is saying, then Intel should be going to the moon. That is, everything has to be replaced. And who else is going to do it? Well, it's not going to be NVIDIA, and it's not going to be AMD. So the question is, what in the whole thing out here makes any sense? And
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.